Natural gas achieved the highs at 2.14, but it has erased all the gains for the week and closed at the support levels at 1.95. Now, can we consider that net gas has reversed? Can we expect a breakdown here as the retracement is done? Or there is further bullish momentum which is to be seen in net gas taking it till towards 2.2, 2.4 levels, which we have been targeting since long. What is going to be our strategy in order to profit trading natural gas in the coming week? We will see with the help of charts and indicators. This is a weekly review. I do share twice a day targets on natural gas, first with the Asia session, next with the US session. 2 updates a day sets the direction and gives you profit levels so that you can all trade profits profitably and comfortably. So do press the bell icon and subscribe to the channel to get the notifications. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. First we'll look into charts alone, followed with indicators, and towards the end I'll be sharing the trading strategy and levels. Watch till the end. If you do like, share and comment, friends, this is always a great motivation for me to deliver consistently to the best of my abilities. Now let's start with the 4-hour charts. See, if you look at the movement on the 4-hour charts, first of all, look at this rise. Higher highs are done. After the highs, it has retraced, consolidated, first rise, retracement, rise, retracement, rise, retracement. Now it is very clear that it is delivering higher lows, higher highs, trying to trade in this bullish channel. Support levels at the current zone you can find out at 1.92 to 1.98 is very strong. Thus, net gas has to either drop on the downside. Even if it drops on the downside, I will say it has got very good support at 1.8688 zone as well. So in sum, the downward movement appears to be limited for gas, but looking at the fall, what we have seen here in the last 2 trading sessions appears that the bears are not willing to keep the prices up. If you look at the movement, see, it has erased all the gains from here. It has come to the support zone. So in the coming week, we have to watch out how it behaves at around 2.02 levels. Any movement in gas beyond 2.02 should take it towards 2.05 and 2.1, and breaking beyond 2.1 is where the bulls will take over. Let's have a look at the daily. On the daily chart, see, look at the last 2 candles, almost flat top, flat. Now this suggests that the movement is very much limited and it is on the downside. The support levels are very strong. Second thing is, look at these 2 candles, the bearishness has also got diminished. Next is we have to wait for a breakout above 2.02 levels, which will confirm the reversal. And the last one is on the daily chart, rise, retracement, rise, retracement, rise, retracement, taking the support from the bottom of the channel. Prices are trying to stay bullish. So as I said, in the coming week, we have to wait only and only if net gas trades below 1.9 and 1.86 zone, we should say that now it is breaking on the downside. Else, right now, you can see after the rise, it is retraced from the double bottom, it is again rising, and it is staying in this bullish channel. So we are still bullish on this, and any point of time, if you see the gas price is staying above 2.1 and 2.2 levels, stay bullish, we will look forward to a stronger rise towards 2.5 levels. Coming to the weekly chart. On the weekly charts, there is only one worry point, that the candle is closed with modest bearishness here. And despite a breakout which it is shown last week, it has erased all the gains. So now in the coming week, it is very important for gas to stay above 2.02 zone, beyond which you can say that now the prices will take a bullish turn. Else we have to still be watchful. Only beyond 2.05 levels is where we can say now the bulls will take over towards 2.1 and 2.2 zone. Else right now, because see, it is closed in red, and if it breaks below 1.9 to 1.9 zone, we should be cautious there. It can try to move towards 1.86, the bottom of the channel, and any break below 1.86 should be a matter of concern for us. After the drop, it is under retracement, and I think it should be a reversal, not a retracement. Let's see if it continues to rise from here. If you look at the movement, it is trading in this bearish channel, the top of the channel somewhere here at around 2.4. That also makes the next levels a bit bullish, where we can see a further rise. Coming to the monthly. Now look at monthly charts, higher lows, higher highs. Certainly I do not see net gas to break below 1.8, 1.78 zone in the next 2 days. But these are markets, anything and everything is possible. Though I do not expect this to happen, but if it happens, if it gives a gap down, and then we can look forward to a sharper fall there. I do not expect this to happen. I expect the current candle to stay in green. Why stay in green? This will lead to the path for a further rise or a bullish candle in the month of May as well. So why it is? Look at the drop here, sharper drop, retracement, then 5 bearish candles. So it should try to give couple of more bullish candles from here. And even if you draw a parallel here, at least we should look forward to a zone which may take the prices towards 3.5 levels in the midterm. When I say midterm, next 3 to 6 months, prices might try to move above 3.5. And in fact, we can look forward for it to break on the upside beyond the preceding highs at 3.7. Thus, in my expectation, the current candle is going to close in green. The next candle is going to stay bullish, where the prices might try to move towards 2.5 levels in the month of May. Now, this is what is on the charts. Let's have a look with the help of indicators what can be expected. Indicators on the monthly charts, moving averages crossing over here and are trading with divergence. These are signs of bearishness, but these are also achievable levels as the prices are trading with too much of divergence from the moving average. So 3, 3.2, 3.5 zone is what is achievable level in the next few months, or you can say near term. If you look at this is trading with extreme divergence and bearishness. I do see that this should be the bottom. It should try to converge, and possibly the current candles, next few candles which are going to stay bullish, might help it converge, crossover, and then the bullish momentum may prevail. Now, as I have shared for crude oil as well, natural gas is one thing which is so far lagged the bullish momentum. Now, energy prices, rising energy prices are the one thing which is going to be a challenge for the central banks to fight, and for their fight against the inflation. And this is also why I see there is going to be a rise in net gas for the near term, next 3 to 6 months, which is going to make it difficult for the inflation to come under control, and that will also check the central bank's policy to cut the interest rate, and which will make the markets further troublesome. So yes, that is what we look forward to in the near future. Right now it is bearish, and I look forward to for it to stay in green for the next few months. RSI forming double bottom, trying to bounce back. Stochastic has also come to oversold levels. It is looking forward to a reversal here. Coming to weekly, on the weekly chart, there is one thing which has happened in the last week, that is, it has achieved the 20 period moving average. Now, achieving the 20 period moving average, we have seen prices taking a sharp U-turn. Now, this is only one worry point for me, because see, just after achieving, we have seen this pullback. If it would have stayed up and would have continued, if it would have been bullish, but right now I can see just a little kiss and a reversal. So that is why again 2.1 levels in the coming week is going to be a important resistance zone, beyond which we can look forward to a rise towards 2.2 and plus plus levels here. If you look at MACD, which is also crossed over here at the bottom, trading with divergence, staying bullish, looking upwards. If you look at the RSI, this is flat, and the stochastic, this is rising. Coming to the daily, on the daily charts, prices have come to take the support from the 20-50 period moving average, which are right now trading with divergence, staying bullish. It has certainly taken the support, possibly taking the support. We can see a reversal here, and see this crossover on the daily charts has happened after a long time. You can see this was the last crossover. This was a sell crossover during October, November, and now after 6 months it is looking forward to a bullish cross. The MACD is still in green. It is trying to cross over for sell. RSI looking down. Stochastic is also dropped. Coming to 4 hours, on the 4-hour charts, moving averages crossing over here. This is sign of bearishness. That is why I say it is very, very important for net gas to now break beyond 2.0 to 2.05 levels. These levels we have been tracking since long, and then 2.1 levels. If these levels are taken, you can say now gas prices have reversed and a bullish momentum may prevail. MACD divergent and bearish. RSI has dropped, and stochastic has also come to oversold levels. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategies so that you can all trade profitably and comfortably. And before I give you the trading levels and strategy, if you want to learn this art of trading, you can be part of 31st mentorship batch starting first Monday of next month, that is May. And yes, you can still be part of it. Register yourself now. Reach out to me for details. In this mentorship batch, we teach all the tools, techniques, strategies, and the trade setups which we have developed with our years of experience, with the help of which you can identify the profitable trends and trades with ease, and you can trade profitably. So do not miss this opportunity. Write an email or ping me on Telegram for your queries related to the services. And if you also want to be part of my signals channel, then also you can write an email or ping me on Telegram. And many of you had asked me to recommend a broker which offers a step-free account with the lowest spreads. You can also find the recommended broker link in the channel and video description. By joining this broker, you can save so much of your money which you are spending towards paying higher fees and the spreads. Now, considering this, first, let's talk about the levels to buy. See, we do see that the prices have come to the resistance levels on the downside, and it is going to be difficult for net gas to now break below 1.9 to 1.9 zone in the coming week, and possibly staying above 1.94, 1.96 zone. We can stay a bullish reversal in net gas. You can buy here at 1.98 levels, wait for 2.02 and then 2.05 levels to be broken. If these two levels are taken, remember we are looking forward to 2.1, 2.14 and 2.2 levels. Now remember, this is the last week's high, going to be a critical resistance. Then this complete zone is going to be critical as well. Beyond these two levels, sky is the limit. We are looking forward to 2.4 levels very soon. In fact, it can try to move towards 2.5, but this is not only applicable for the coming week but for the next few weeks. So yes, staying about 2.14, 2.2 zone, just stay bullish in natural gas. We are looking forward to a stronger rise. On the downside, where you should take a sell entry, you can sell entry, you can take a sell at 1.935 levels, expect 1.92, 1.9. Now see, as long as 1.84 and then 1.84 levels. Once it breaks below 1.84 is where you can say now natural gas is showing the bearish momentum, and then 1.8, 1.76 levels will be seen. Chances of this happening appears to be less, but looking at what we have seen in natural gas for the last few months, it appears a crash is what is something which is normal for gas. The rise is a bit slow, but the fall is always sharp. And this is making me a bit cautious, though I do not expect the natural gas to trade bearish for the coming few weeks. But looking at the momentum, we have to be very careful. If it's a sell entry, you have to sell. And specifically on the sell entries, you have to trail your stop losses. On the buy side, I still expect it to rise more. 2.2, 2.5 levels should be the target in the near future. In fact, we can look forward to a stronger rise in the near future as well. So take your positions accordingly. For the next week specifically, you have to be cautious. It might stay in zone for the next first 2 days, and then we can look forward to a rise. Take your positions accordingly. Like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for your queries related to the services. Have a great profitable trading week ahead and a happy weekend. Thank you. Do watch the twice a day updates every day, which sets the direction and where you get the targets. Join the free Telegram channel for live market updates as well. Thank you.